Well, we're bracing ourselves for a good opening this morning, but let's get to some stock talk now. HDFC Life is the first corporate we're speaking to after their Q3 earnings. The company posted a strong APE and value of new business growth, but the margins struggled a bit, came in lower, likely due to the lower margin business of Exide Life. But let's find out more. We have Vibha Padalkar, who's the MD and CEO of the company, joining us now. Vibha, good morning and thanks for being with us on the show. Can you tell us how do you see the Q4 performance shape up and what exactly aided the APE growth in Q3?
On the total APE, a few things that have worked well. On the retail APE, we have grown faster than the sector. And this is firing on all cylinders, especially our agency channel. Share of our agency channel has gone up from about 14% of our business to 18% of our business. Annuity again has done exceptionally well. We are ranked number one in terms of in the private sector and also have grown about 60%. This is both individual plus group. Also, if you were to look at growth in renewal premium, that has grown very robust on the back of excellent persistency. So it's a combination of all of this. Credit Life has grown about 52%. So all of that has come together and it has been a broad-based growth, very much in line with our strategy of having a balanced distribution mix and balanced product mix. So that culmination has happened. And lastly, as you know, we've done the merger with our subsidiary Exide Life. And that too has dovetailed into this, giving further accretion to our top line.
So could you give us some numbers? What do you see the APE growth, say, in Q4 of this year?
At least on the retail APE side, we should grow faster than the sector. And that would mean about 15 to 18% growth on the retail side. On Credit Life, we should continue to be the market leader. We are number one in the group private space. And we continue to hold that position. That's how we see that. Growth so far has been 50-60%. Again, we should track somewhere along those lines.
Vibha, good morning. Despite strong overall growth, margins have come in lower. Is this the result of merging Exide Life into the company? Or is it just the underlying business?
So I want to clarify here, the margins actually have been very robust. The poll, etc., that you talked about, that's on a standalone HDFC Life basis. The margins that we have put out now, and like I mentioned in my commentary on the investor call, is that we will be only disclosing company level, consolidated company level margins. And as we mentioned, say in Q2, at the time of the merger approval coming through, that Exide Life's margins were high single digits. And we said that for us to get to margin neutrality, meaning the same margins that we had same time last year, would take at least a year, if not longer. We have actually been able to extract synergy. So we have advanced the margin neutrality date. And so we are actually very pleased about it. To give you a sense, last year, 9 months, last year was 26.5%. This year with Exide Life, like they had single-digit margins that we mentioned last quarter, despite that, we have got 26.5% margin, which means standalone HDFC Life margins are significantly higher and very comfortable with some of the numbers that you talked about. It's just that it's not visible because these are combined numbers. Same thing on the third quarter. If you see standalone third quarter, again, there's margin accretion wherein standalone was 26.8% Q3 of this year and 26.8% Q3 of corresponding period last year. So again, there's been a steady quarter-on-quarter uplift of margin. This is, of course, at a consolidated level. Again, the clarification is HDFC Life standalone, hypothetically, would have been much higher levels of margin.
Just to clarify, Vibha, so margins for Q4 and for the full year should look better, right?
So we should end the year again very close to margin neutrality, because this is just synergy extractions are still happening. So that's the kind of level that we are likely to close at.
Okay, so once the Parliament approves these insurance amendments, how much time do you think it would take for you to enter the health insurance market? Because that's the big question on everyone's mind.
It should take about 6 months or so for us to really ideate, because right now It's not that we don't, we do all the time, but final form or shape, the devil is in details as to what can one do, what can one charge, those sorts, which channels can sell, can I do direct, many such things. So we'll have to see those contours.
All right, Vibha, does it make sense to merge HDFC Ergo into the current listed companies rather than having two companies from the same group operating in the same health insurance market? What are your thoughts?
So the way I look at this is slightly different. More than the here and now obvious about, do you merge or not? That is that's a tactical outcome. The way I see it today is that, can I, for example, do things that a general insurer, because of perhaps amount of capital and so on, cannot do? For example, today, every year, if a health policy is repriced, or every few years, what if I were to charge more, but I'm giving a guarantee like I give for life insurance, wherein if a person takes a protection policy and unfortunately in a week's time is detected for a major illness, I as an insurer cannot reprice it no matter what. Like that, if I were to charge a little bit more, but I give a guarantee that until a person is alive, this is covered, or maybe for the next 10 years or 15 years. These are sort of innovations that I would be focused on, rather than saying that, it's a zero-sum game. Either HDFC Life gets it or someone else gets it. That's not how I'm looking at it. I'm really, because really the pie can be expanded to many different avatars, like this couple of examples that I've given you. So that's how I would see it. Disability is another one today, because it's easy to say no to it, because it does require capital, because of much, higher levels of potentially a claim. So, and the pricing has to be right. But at a price, one can cover risk. So it's a question of what price, what is the underwriting, how much does one retain on our books, how much is reinsured, and and so on. It's those sorts of things that would enthuse us.
All right, great conversation, Vibha. Good luck. Thank you so much for joining us. It's a fascinating business to understand and kind of discuss. And there is so much happening in this space, right? So many new regulations which will come into full force this year and the year ahead. And it'll be interesting to see which one kind of comes out the winner. Stocks have underperformed for a few years now. It's in a way an interesting space. I put out ICICI Pru as one of the stocks, slightly longer term, with a longer term view on market laser towards the end of December. That was at about 450 or so. Stocks moved up a little bit, but this is a space as such where I think there is a fair bit of interest after a few years, which may start to come back. Prakash Diwan is with us, market expert.